Good
Hello, hello.
afternoon, everyone. On behalf of Women Members Excellence Committee of ICAI, it is my pleasure to welcome you all to Yashaswini and Idol Series 22. Yashaswini and Idol is a Wednesday series of program conducted by WMEC for women CAs and by women CAs. This series is an extension of Sky High Symposium, which concluded its 100 episodes. It is one of the committee's initiative to not only disseminate information to women members on technical updation and non-technical skills, but also to empower and inspire women members to come at forefront and realize their verbal skills at public forum. The driving force behind this remarkable initiative is CA Preeti Paras Savla ma'am, our esteemed Central Council member of ICAI and independent director. She chairs the WMEC and serves on the Board of Discipline. Internationally, she represents India on ISB Sustainability Standards Advisory Forum and chairs the SAFA Sustainability Board. With governance role in prominent companies like Sun Pharma and IRB Infrastructure, she also holds unique distinction as India's first social auditor and contributes significantly to social impact initiatives through her role at the Institute of Social Auditors of India and Social Stock Exchange BSE. I now welcome Preeti ma'am to give her welcome address.
Thank you, Priyanka. And today's series, we have with us the new and very dynamic speakers for the session, CA Priyanshi Choksi, who will be taking us through the transfer pricing litigation. And we also have today speaker Vinaya Chogle. Being a chartered accountant, she'll be an extraordinary, right? And this is very, both the topics are very novel and very inspiring also. A member who wants to have their direction and the practice in transfer pricing, the litigation, very few chartered accountants are there in the litigation area. And Priyanshi is one of them. Very young, very dynamic. So Priyanshi will welcome you. Everyone has a special story and the success story in their life, especially as a women come out with a lot of struggles and find opportunities in the challenges. And we have to take our own path and the pave the waves. So for that, we have CA Vinaya Chogle who will motivate all of us. And we are very beautiful, wonderful women over here. Manisha Madam, Poonam and Priyanka and Komal who are moderators for today. Today being the 22nd episode, we'll be completing soon the silver jubilee of our Yashas, the successful woman and idol. That is, what is an idol means is innovative and diversity and outstanding performers and the leaders who are all are in ourselves. We have completed 4 Falcons and reach out to more than 1,000 women members. And every Wednesday, we are reaching out to all of you, all my beautiful, wonderful women members. It's my endeavor to serve all of you the best, and I wish you to have a great career in your life and a profession. With these words, I welcome all of you to the Yashaswini and Idol series number 22. Welcome all of you and wish you a very great learning today. Thank you very much.
Thank you, Preeti ma'am, for your warm welcome and insightful, inspiring words. For our first session, we have CA Priyanshi. CA Priyanshi is a chartered accountant and tax lawyer with an LLM from NIU. Now leads Adarsha Legal LLP. She is a co-founder of Beyond the Degree. She provides career guidance and training in taxation, finance, and entrepreneurship. Her expertise has been highlighted in the Times of India, NY Times, and Economic Times. Priyanshi also has a background as a radio Mirchi jockey and is an international level swimmer. I now request Priyanshi ma'am to begin with our first session on transfer pricing litigation. Thank you, ma'am.
Thank you so much for the introduction. And a big thank you to Preeti ma'am and for everyone present here for actually taking this initiative and for starting this series. Very honored and privileged to be invited as a speaker here today. And I know my topic may be a little technical, but when as a tax lawyer, we've noticed that the representation of women in general when it comes to tax litigation is really, really less. So I hope that my experiences and everything that I'll be talking about today actually encourages a few of the women CA come lawyers as well as women CAs to actually take up tax litigation or transfer pricing litigation. I will be sharing my screen. If you can just let me know if you're able to see my screen as well.
Yes, ma'am. It's clearly visible.
Okay, thank you so much. Just a brief recap, I understand that majority of the people listening to this conversation would be knowing what transfer pricing litigation is, as well as what the basics of transfer pricing are and the transfer pricing assessment procedure. But just to give a very, very brief recap, what really is covered within the meaning of transfer pricing is international transactions between two associated enterprises. So let's say that you're a person who has a business, a company A in India, and you have a company B, which is, let's say, in the United States. Now, if there's any sort of transaction, supply of goods or services, provision of services, anything that takes place between company A and company B, if that particular transaction is not at arm's length, basically, it's not at a standard, is not as per market standards, then this particular transaction will be covered under Indian transfer pricing regulations. Now, the whole question of transfer pricing litigation comes into picture when, let's say, I, as the assessee, say that there's a company A, there's a company B. The profit margin between any transaction between both the companies should be 5%. But let's say the department comes and tells me that, hey, no, the market margin is 9% or 10%, which is why you also have to follow a margin of 10%. Then, in those particular cases, there is a whole series of transfer pricing litigation that takes place, and it can be a never-ending procedure. But also a procedure where we as lawyers and we as CAs actually can show our expertise and can show our experience. So this is just a brief of the transfer pricing assessment procedure. I'll just run through this very quickly and then actually cover the practical issues associated with transfer pricing litigation. So the first thing that you do is when you file an income tax return, it's picked up for scrutiny by an assessing officer. When it's picked up for scrutiny, and if the assessing officer notices that there are certain international transactions or there are different related parties between whom or intra-group entities between whom transactions have taken place, they'll make a reference to your transfer pricing officer. He'll ask for certain information, documents, and finally, he'll decide whether a TP audit should be conducted, not be conducted. And finally, an order is passed by the assessing officer after making a reference to the transfer pricing officer. Now, the real question where clients also come to us either as CAs or as CAs and lawyers is basically once an assessing officer passes a particular order, and if you're not happy with that order, what do you do? Now, in usual cases, the procedure is very simple. You go to the Commissioner Appeals, you go to the tribunals, you'll go to the High Court, you'll go to the Supreme Court. But for transfer pricing cases in particular, there is one difference. Now, for the purpose of faster dispute resolution or for fast track resolution of cases, they've introduced something known as a dispute resolution panel. And the choice is with the assessee or with us as individuals, whether we want to go to the Commissioner Appeals and follow the regular procedure, or we want to go to the dispute resolution panel and get our case resolved really, really quick. So on the right-hand side is just a basic set of documents that the transfer pricing officer usually asks for while he's conducting his assessment. And this is usually the appeal procedure that we follow. Whether you go to the Commissioner of Income Tax Appeals or you go to the dispute resolution panel, if you're aggrieved, you can go to the tribunals. you can go to the High Court. But of course, you can go to the High Court only if you have a particular question pertaining to law and not a fact. I will cover this in much more detail later in the presentation. And then you can appeal to the Supreme Court if you're not happy with any of the previous decisions. The one thing that's very, very important in case of transfer pricing cases is that your commissioners, as well as your assessing officers, they have additional powers to review any transfer pricing order that has been passed. So they can, if let's say your assessing officer passes an order which has certain aspects relating to transfer pricing, then your commissioner will also have additional powers to review those orders, and they can either go for rectification, send it back to the previous officer for further inquiry, they can call for additional information. These additional powers are only provided in case of transfer pricing disputes. So the main question that I was coming to, for which majority of clients usually come to us, at least when they are at their initial stages of dispute resolution, is two pertinent questions: whether you should go to the dispute resolution panel or whether you should go to the Commissioner of Income Tax Appeals. In short, there are a lot of technicalities around this. But as a lawyer, let me tell you that if you think you're sure of winning your case, then you go to the dispute resolution panel very, very simply. And if you think that there's a lot of uncertainty in your case and you think you have a losing case, then that's when you go to the Commissioner of Income Tax Appeals, because that's where you have a lot of powers of negotiation or, to arrive at a settlement. But if you go to the dispute resolution panel, no settlement, your case will be heard as is, no power to negotiate. Whatever the panel decides, that will be the final decision. But that's just in layman terms, telling you as a lawyer. But looking at it a lot more technically, a dispute resolution panel is basically a 2-member or a 3-member panel, whereas your Commissioner of Income Tax Appeals is a single commissioner, a single officer who will be listening to your case. So a 3-member panel will be able to exercise wider discretion when looking at your case versus just one single officer, but you will not be in a position to negotiate with the panel, as I mentioned. Dispute resolution panels are like a fast track procedure. It usually gets resolved within a period of 9 months itself. If you go to the Commissioner of Income Tax Appeals, you have to follow the regular timelines that are stipulated in the Income Tax Act, plus 12 months for your transfer pricing proceedings. Basically, you follow timelines of like 21 months, 24 months, whatever the case is. You don't have a shorter timeline of 9 months. In case of a dispute resolution panel, what happens is you get an automatic stay on a previous order that has been passed. So you will not be required to pay any tax liability. No other officer can initiate any sort of proceedings against you. Whereas if you're still at the Commissioner of Appeals stage, then in that particular scenario, you have to separately make an application for stay of a previous order that has been passed, which is not in your favor. That application will either be accepted or will not be accepted. It's completely at the discretion of the officer. So these are just different points for clients to majorly understand how they want to plan their litigation strategy. If you go to a dispute resolution panel, if you're someone who doesn't enjoy being aggressive with litigation or doesn't want to get into the whole procedure of litigation, at the DRP stage, you can just finish off your matter in 1 or 2 hearings. Whereas at the Commissioner of Appeals stage, it could take about like 10 hearings, 20 hearings, for however long the officer wants to meet you, and for however long the officer keeps asking you for certain information. So these are the main differences between DRP and CIT. Of course, based on the facts of your case is when any sort of consultant or lawyer will be able to advise on what sort of action to take. These are just certain time limits in case a reference is made to a transfer pricing officer. I don't want to get into the technicalities of the time limits because they're all provided in the Act and they keep changing on a year-on-year basis as well. But one decision that I wanted to highlight was the landmark Roka bathroom case issued by the Supreme Court of India. Very, very recent, issued in 2024, for a lot of practicing lawyers listening to this conversation, I'm sure you know what case I'm talking about. But just to give a brief to everyone present here and why this is going to affect litigation, at least in the year 2024 and 2025, is what the Roka bathroom case says is that in case of any transfer pricing case where your matter has been referred to the DRP, like I explained to you in the previous slide, if your matter has been referred to the dispute resolution panel, and if you're trying to understand the time limits within which an order has been passed, whether that particular order is time barred or is not time barred, then the time limits under the section 144C, which basically deals with the time limits for passing a dispute resolution order, will be completely independent of your regular time limits provided under section 153, basically the time limits that you see right here and many additional time limits. There will be no extension of time limit by 12 months, even in cases where there is transfer pricing, because again, the time limit stipulated under section 144C, which is pertaining to your dispute resolution panel, is completely independent and provides for no sort of exclusions. Now, the reason why it was important to bring this particular case is that a lot of matters from a litigation perspective are actually going to get time barred or are being dismissed because the majority of these orders that have been passed are time barred. I was actually recently at the High Court last week, and I was listening to a senior advocate argue on another very independent transfer pricing case. But I saw him make a reference to the Roka bathroom case. And the case went on the arguments on the Roka bathroom case went on for almost about a good 4 to 5 hours, with the whole discussion being whether the particular order passed by the assessing officer was after a hearing of the dispute resolution panel was time barred or was not time barred. And ultimately, a lot of the practical issues, even with this particular hearing that come in, are that let's say that your order, which was passed by the assessing officer, was passed on 30th March, whereas the time limit ends on 31st March. Then, on the grounds of fair and equitable treatment, of reasonableness, and read in light with the Roka bathroom case, is the order still considered to be time barred or is it still considered to be passed in time? This was actually what happened in the case which was being argued at the High Court in a writ petition. And I just found it very interesting because, even in these kind of cases, there's always an ambiguity with respect to what time period are you going to calculate, and are you also going to read it in accordance with, our basic principles of law, like your principles of natural justice, your principle of whether a particular order is reasonable if not passed in time, or your principle of fair treatment. So I understand that these topics and this particular case can also be very technical. But for all those listening, I'm very happy to take on very specific questions as well towards the end of the session on the more technical topics. So when it comes to transfer pricing litigation, there are key areas of litigation that really take place or where majority of the disputes go on. The first one is whether transfer pricing is applicable itself or not. Very simple examples. Let's say you have a case of company A, company B, and there's a whole case of reimbursement of expenses. Now, what your Income Tax Act says is that transfer pricing applies in a case where, any transaction will affect your income, profit, or will affect anything in your profit and loss statement, in your as part of your financial statement. But very simple example that I gave you, reimbursement of expenses. If the reimbursement takes place on a cost to cost basis, then in that particular scenario, it's not going to affect your profits. It's not going to affect your income because what you spent is what you're receiving. So in that particular case, should transfer pricing provisions be applicable or not? Or are you required to benchmark your transaction or not? Again, this has been an area of major litigation. There are different tribunals that have taken a different stand. Some tribunals that say that no, you still have to use other method, which is your sixth method to benchmark the transaction. There are some tribunals and courts that say that no, you don't even need to disclose this particular transaction for it to fall under transfer pricing guidelines. So this was just one particular example that I gave you. There are actually a lot of other transactions that also fall within this particular controversy. Very basic transactions, but have been the subject of transfer pricing litigation since very, very long. What if you're issuing compulsory convertible debt instruments to your shareholders? In that particular case, do you calculate notional interest or not for the purpose of application of transfer pricing guidelines? What if I, as an individual, or I, as a company, have given a loan to my company B, which is present in the United States? And what if the loan has not been repaid? Or, what if the loan is still to be repaid, let's say after 10 years or 15 years? In that particular scenario as well, do you try to see how to calculate notional interest just to see if transfer pricing is applicable or not? Very basic examples, but still the subject of a wide amount of litigation. The second aspect is the relationship between two associated enterprises, two entities basically, company A and company B in our example. Do they fall under the definition of associated enterprises provided under transfer pricing guidelines? A major area where this is actually under litigation is today we have a lot of entities in Gift City in IFSC. And Gift City, IFSC, and Ahmedabad, they're all considered technically, they are a part of India, but for all your tax purposes and everything else, any entity which is set up in Gift City, IFSC, etc., is actually can be considered a non-resident entity of India from a holistic tax perspective. So now, if I have a company A which is in Mumbai, but I have a company C which is in Gift City, and there is a transaction between company A and company C, then in that particular scenario, can I say that transfer pricing applies? Or can I say that transfer pricing does not apply to any transaction that takes place within these entities? Again, has been the subject of litigation, but we always, as consultants, we always try to follow a very conservative view, disclose the transaction, transfer pricing applies, ensure that your transaction is as per the arm's length margin. The third litigable area is the meaning of international transaction. It flows in from the same concept of, do we fall under definition of associated enterprises? Is there any attribution to, the profits, the income, or any effect on the profit or loss or statement of any particular entity? Then only only when a transaction satisfies all of these factors can it be considered an international transaction under your transfer pricing guidelines. The fourth aspect is, how are you going to compute your profit level indicator? Basically, for the benefit of everyone, your profit level indicator is when you're benchmarking, a particular transaction. You have to, determine your profit margin of your own company and the profit margin of a different set of comparable companies that you select for the purpose of benchmarking your transaction. So now, this we in India and a lot of other countries, we follow the OECD guidelines basically for understanding, what should be considered income, what should be considered expenses, because income minus expenses are going to give you your profit and then your profit margins. So what income are you going to consider? Your primary income, secondary income, are you going to consider a mix of both? When you're calculating your operating expenses, major litigation with respect to your foreign exchange difference. Can you consider that an expense, or can you not consider that an expense? Marketing expenses. Is there like a limit on how much you can consider as a deduction in relation to marketing expenses? Interest. That how much interest can you actually deduct? The transfer pricing guidelines provide all across the globe actually provide for major restrictions on how much interest you can deduct, because we as assessees or as individuals or as business owners, we're very, very smart. We can show interest, we can show notional interest, and then we can show a huge amount of interest expenses to reduce our profit to almost nil. So that's why it's a litigable area again. Just very selected examples that I'm giving you. If you're using a particular transfer pricing method, or if you have a transaction, what method do you want to apply with respect to transfer pricing? Do you apply your transactional net margin method, where you compute the profit of your entity, the profit margins of comparable entities, and then you compare the ranges? Do you apply the comparable uncontrolled price method, profit split method, cost plus method? I don't want to get into the details of the different methods that we use, since we don't have a lot of time. But the basic idea is that I, as an assessee, can pick, let's say, the cup method. But tomorrow the department may come and tell me that, no, sorry, why did you pick the cup method, and why did you not pick the profit split method or the transactional net margin method? Again, another area of litigation. If you're determining, if you're undertaking a benchmarking analysis of your comparable companies, what sort of filters are you going to use? That can you consider each and every company, or what sort of service filters, business filters do you use? Do you only consider, if my company has a very, very high turnover, is it okay for me to consider loss-making companies? Or if my company is a loss-making company, then is it okay for me to consider a company which has very, very high profit margins? Again, that would make the balance completely not in favor of the individual or the business owner, right? But the department wants to make their share of money. So again, another area of litigation. As consultants, and especially if individuals have been working as tax lawyers, I'm sure these are very, very common issues that we see every now and then when it comes to transfer pricing litigation. But still, a lot of uncertainty with respect to each and every single issue, because every case is different and everything depends on the facts of individual cases. So these are certain major practical issues that we face with the transfer pricing methodology that we use. We already spoke about filters. What sort of filters do you use? Can you use a turnover filter? Foreign exchange, can you consider that an expense, not an expense? What if you're paying certain salary to your employees? Can you consider that as a deductible expense, or can you not consider that as a deductible expense? What do you use, only your current year data, or do you use current year data as well as previous year data? Whether you can select loss-making companies or super high profit-making companies. Can you make any sort of adjustments for your working capital? In fact, when it comes to a selection of comparables, a lot of assessing officers actually take the stand that you cannot even consider foreign companies for the purpose of your analysis. So if the transfer pricing regulations being followed are from India, then you can only consider Indian companies as comparables and not any sort of foreign companies, which could be very, very, which could also not favor the assessee in a lot of cases. Because let's say that majority of my business is like 80% of it is outside India and only 20% of it is in India. Then why can't I use my foreign companies as comparables for the purpose of, undertaking a whole benchmarking analysis? Because the analysis would only then be accurate. Again, the same question of export versus domestic markets based on where your entity is operating, or where majority of the material transactions really take place. What about intra-group services? Are those intra-group services covered under transfer pricing, not covered under transfer pricing? Can they be considered deemed international transactions? The examples that I gave you of entities in Gift City and entities in Mumbai operating, those could come under the whole bracket of deemed international transactions, even though the entities are technically located in India. I think one major area that I've seen, so I was actually also working in the United States for 1 year in the whole field of international tax and transfer pricing, which is why I really wanted to take on this one particular issue, which is with respect to business restructuring. So now what happens is that even though there's a standard framework for transfer pricing, which is laid down by OECD, which basically provides all your basic definitions and understanding of basic concepts, what really happens is that different countries still follow different transfer pricing methodologies or guidelines, or different benchmarking analysis methods. So let's say that you have a business restructuring that takes place, a very simple business restructuring. We can take the example of a merger. Let's say there's a merger between company A and company B. And as part of that merger, you issue certain instruments to the shareholders of company AB, the merged entity that will be formed. Indian transfer pricing guidelines could probably say that no, transfer pricing does not apply to, this merger and this issuance of instruments to the shareholders. But the transfer pricing guidelines of USA, for example, could say that no, the transfer pricing guidelines apply. So you have to undertake a benchmarking analysis. So in these kind of scenarios where there's, a dispute or a clash between the guidelines, provided in different countries, and so as to not cause any sort of burden to the taxpayers, in recent times, a lot of countries have actually started resorting to something known as mutual agreement procedures, which are provided in your tax treaties itself. Basically, a way in which, in our example, based on the India-USA tax treaty, both the countries could, negotiate, try to understand whether the transfer pricing guidelines should apply or not. And if it all they apply, then where should the profits be attributed in case of this whole merger of company A and company B? And where should the international transaction be deemed to have taken place? And what sort of benchmarking analysis are you going to really use? So very common in case of business restructuring, because you usually have entities located in different jurisdictions in different countries, and there could be international tax disputes that take place because of this whole restructuring. So these are the alternate dispute resolution mechanisms that have been introduced to ensure complete streamlining of the transfer pricing assessment and litigation procedure. We already spoke about mutual agreement procedures, resolution between two different countries to avoid no taxation, to avoid double taxation, or to ensure that international transfer pricing disputes are resolved within a stipulated period of time and for the benefit of both the nations. Dispute resolution panel, we discussed in detail. Very, very important, introduced in almost about 2012 now. I was actually working at EY and lucky enough to work on one of the initial advanced pricing agreements that took place in India. Basically, what happens in an advanced pricing agreement is that let's say you have a large business and you have franchises all over the world. For example, let's say you're McDonald's and you have a franchise unit in India and franchise units all across the globe. You can't keep getting into transfer pricing litigation or disputes in every single country in which you have transactions, right? Because you have so many franchise units. So what the Indian government offered and what a lot of international governments have offered is that, hey, now you can apply for something known as an advanced pricing agreement, no litigation. Me, which is McDonald's, and the government, Indian government, will arrive at a settlement that, okay, on a year-on-year basis, you have to show a profit margin of 5%. It's a predetermined profit margin arrived by way of, negotiation between both the entities, the government and McDonald's. So you will have to show a profit margin of 5% on a year-on-year basis. And if you do that, then we as the government will not touch your case. We will not litigate. We will not take up your case for scrutiny. And this usually covers a period of like 5 years ahead and 4 years behind as well. So it actually provides the benefit of retrospective application as well. Very, very beneficial, like I said, for a lot of MNCs especially, but also the procedure to actually file an advanced pricing agreement from a consultant and lawyer's perspective is very, very tedious because the government requires, a whole history of your business, extensive documentation. You'll have to show your projected cash flows, your projected profit and income statements for the next 5 years. A lot of details that have to be submitted, and a process that could take almost 6 to 7 months just for the application. So has its pros and cons. The last thing in terms of alternate dispute resolution is something known as a safe harbor, which has been introduced by the government, also introduced in 2013 at around the same time as advanced pricing agreements. Under safe harbors, there are very predetermined margins that have been provided by the government itself for very specific industries. For example, for your technology industries, for your diamond industries, basically very common industries in which it's common to have a business in India and have a business abroad and a lot of international scope for a lot of international transactions. They provide stipulated margins, and they'll tell you as a business owner that, hey, if the services that you provide falls under this specific category, then even if you show a margin of 2% or 3%, you're okay. We will not take up your case for scrutiny. We will not take up your case for litigation. But like I said, we Indians are very, very smart when it comes to finding our way out of things. So, and how the whole aspect of transfer pricing litigation has also creeped into safe harbor provisions is this. Basically, what happens is that even if we as business owners, let's say today I'm an Amazon, I'm completely engaged in e-commerce services, and there is a specific margin provided for IT-enabled solutions under your safe harbor provisions of 2%. Today, I'll try to structure or show the memorandum of association of Amazon in such a way that I will tweak it to show that my business falls under IT-enabled solutions. So instead of working in a way where we apply the safe harbor provisions, what businesses have started doing is they've started acting reverse. They've started changing their basic incorporation documents to ensure that the language in there ties in with safe harbor provisions so that they can get the benefit. So now what the department has started doing is a complete approach of substance over form, as we've also been seeing with all our tax and anti-avoidance provisions, that we're not just looking at the language of the documentation anymore. We're going to look at what your business is actually doing. What is the substance of the business? What does your website say? Where do majority of your profits come from? And if majority of your profits don't come from IT services and they come from, let's say, selling creams, for example, very random example, then I'm not going to let you apply safe harbor provisions. You will have to go under the normal transfer pricing route. Another area of litigation. So because of the amount of litigation that is going around in this whole concept, and to actually streamline the process, there has been a sort of shift in approach to look at, as I mentioned, to look more at the substance over form of different entities. Basically, departments now do a very, very thorough function, asset, and risk analysis before they look at your benchmarking analysis. The government has started using very, very enhanced software for those actually working in transfer pricing, Capitaline, ProS. A lot of enhanced softwares are now being used by the Indian governments to understand whether your selection of comparables is appropriate or not. Alternate dispute resolution mechanisms is what we already spoke about. They've also tried to reduce the timelines for actually conducting your transfer pricing assessment. Very recent example that I mentioned to you, the ROCA case, the ROCA landmark case, which is going to reduce transfer pricing litigation to a large extent, we hope. Some of the drawbacks with the evolving transfer pricing litigation position in India is that in a lot of cases, the courts, because they can only decide on questions of law and not on question of facts, they demand matters back to the assessing officer, to the tribunals. So you as an assessee have to go through the whole process all the way from scratch. There's a lot of uncertainty because for a lot of cases, like I mentioned, loss-making or abnormally high profit-making entities, can they be taken as comparables? Foreign exchange, can it be deductible or not? Conflicting judgments issued by the same tribunals. So what sort of judgments are you going to rely on? The assessee will rely on judgments in his favor. The department will rely on judgments in their favor. So how do you arrive at a resolution? Again, your revenue, the department basically, they cannot appeal against any order issued by the DRP. So if you as a business owner opt for the DRP route, great benefit for you because the revenue cannot appeal against it. But it's not a benefit for the department, because then what they really do is they start questioning the information that was received. They start calling for additional information, or they go for the whole rectification route, which can be another area for further litigation and no resolution of disputes. Key updates that have been introduced in the budget, very, very specific to transfer pricing litigation and tax litigation in general, actually. The government has promised to simplify transfer pricing assessment and litigation. More safe harbor margins have been introduced. A recent session that I took was with respect to the diamond industry. So for all the diamond merchants, safe harbor margins have been introduced. But now areas where litigation is going to increase is your whole concept of benchmarking has been expanded to even your domestic transactions. So earlier, transfer pricing didn't apply to domestic transactions if the value of the transactions did not exceed 20 crore. But now, if you have transactions between an entity in Mumbai and even an entity in Surat, but if they are deemed international transactions, or if they fall under the definition of specified domestic transactions, any transaction between company A and another entity in a special economic zone, IFSC, GIFT City, all of these are now covered under transfer pricing. One other benefit, if you have an entity in GIFT City, any interest expense that you deduct, there's no limit on that. So the transfer pricing limitations that apply to regular entities will not apply to you. A benefit and a drawback of Vivad Se Vishwas scheme. It has been introduced for the purpose of, fast track litigation, streamline litigation. Basically, if you have any transfer pricing litigation pending prior to 23rd July 2024, if you have any case pending at the DRP, commissioner level, tribunal, high court, or Supreme Court level, you can apply for the scheme. You'll either pay no tax or you'll pay a certain percentage of your tax, no litigation, and your case is resolved. But another drawback is, and this is what I personally faced for one of my clients, is that what really happened in that particular case was that we were negotiating with the Commissioner of Appeals. Our case had not been resolved. We had not filed any sort of appeal. We were only negotiating with the Commissioner of Appeals. And because we were in the process of negotiation and no real appeal or submission had actually been filed, we completely missed the window of Vivad Se Vishwas. And I'm sure a lot of other individuals will also be facing, similar cases where you're just in the process of talking to the commissioners, giving them documents, responding to their queries, but no real case has been filed. And in that particular scenario, how do you go under the Vivad Se Vishwas scheme? Like I was talking to another member from the ITAT, and what he mentioned is so relevant in this case that, when it comes to transfer pricing litigation resolution or tax litigation resolution, it's like waiting at a bus stop. If you miss the bus, then you're going to miss the bus for, another 4 years, for example. These are actually from very landmark decisions. I just, try to collect a few of the important points from different landmark decisions that have been issued over the years. We can go point by point and not too much in detail. The first and most important one being question of facts versus questions of law. What the courts have started saying today is that only if you have a question of law, that if there's something really, really wrong with what the lower officers or lower authorities have done, can you come to me at the High Court level or at the Supreme Court level to resolve your dispute. But if it's something relating to what sort of methodology has been used or what sort of comparables have been selected, or whether it's an international transaction or not, and those are complete questions of facts, which only, the assessing officer, commissioner, DRP, or the tribunal has the power to decide. So a lot of the transfer pricing litigation cases where business owners file a writ before the High Court get dismissed on these lines that it's not a question of law, we're sorry, we don't have jurisdiction as the High Court. The complete onus is on the department to prove that this case should go for transfer pricing litigation. There are multiple landmark decisions that have come in over the years which say that you as the assessing officer, you cannot question the method that has been adopted by the assessee. If I choose to adopt transactional net margin method, or if I choose to adopt cup method, you cannot come and question me and tell me, why did you adopt this method and not the other method? You simply have to look into whether the benchmarking analysis that I have conducted is correct, is as per industry margins, or is as per the market, nothing else. Other landmark decisions that say that transfer pricing law that very emphatically state now that TP law does not apply if you don't have any sort of income, profits, or no bearing on the profits of your company. You don't have to apply transfer pricing law. The whole question of attribution of profits has actually come into picture. If you have a permanent establishment in different countries, if you're a large company having entities in different jurisdictions, where do you attribute your profits? To which permanent establishment do you attribute your profits? And then how does the transfer pricing law come into picture with respect to those profits that have been attributed? Also, other provisions that say that any adjustment that is made under transfer pricing litigation, it cannot exceed your total revenues, your total income. And if you as the taxpayer, you decide to make the adjustment yourself, or if your case goes for TP audit and you realize that you missed out on certain things, try to make a TP adjustment yourself, no penalty will be levied by the department because the business owners, assessees are actually cooperating with the department. Since I worked abroad, just in brief, I wanted to cover last 2 or 3 slides more on like the interplay between transfer pricing in India and international transfer pricing. And the reason why I really thought this was relevant was again in the context of, you know, businesses today or companies today, we all have an international presence. Like we Indians, we'll have to set up an entity in India, we'll have to set up an entity in Gift City, and we also love to set up an entity in Dubai, for example. So then in those particular cases, you cannot only look at Indian transfer pricing guidelines, right? You have to structure your business in such a way that it also complies with the general international transfer pricing guidelines. So these are all in line with, you know, the guidelines and framework issued by OECD, your United Nations, as well as BEPS, Base Erosion Profit Shifting Guidelines, as you may be aware of, and pillar 1, pillar 2, everything that falls under the ambit of international transfer pricing. Very important questions that come into play here to if you really want to prevent litigation, prolonged litigation, especially in the long run, is substance requirements. Ensure that if you set up any entity in a particular jurisdiction, don't set it up as a shell entity. Don't set it up as a dummy entity. Ensure that there's a director there, there's sufficient number of employees, that entity has enough substance to show that, okay, that particular entity is actually conducting business operations which are in accordance with market standards. Your international transfer pricing has completely expanded the definition of permanent establishment. Now, even if you have one employee or one director in another country who runs the business or who makes any sort of decisions, that business, you know, could also be considered as having a permanent establishment in that particular country. So you have to ensure that you structure your whole business in such a way that based on what your requirements are, you're not setting up a particular permanent establishment in that country. You're not setting up a business that could lead to, you know, double taxes in let's say in India and in USA. Very interesting concept, hybrid mismatches. It's completely evolving right now, especially in case of entities that are now set up in like, you know, your tax havens or UK, US, India, you know, any entity set up in these particular corridors. A very, very technical term, but I'll just explain it in very brief. Basically, what happens is that an entity can be considered a company in India, but it could be considered a partnership in the US. And it, for example, it could be considered a flow-through entity, let's say, in the US. And at the same time, it could be considered a company in UK. So in that particular case, how do you attribute the profits especially when there's a transaction that takes place between US, UK, and India. And let's say that US will pass on the profits to their partners or shareholders because it's a flow-through entity. But the Indian entities and the UK entities will get taxed on that particular income. So then how do you apply transfer pricing guidelines to any transaction between, a company which is a separate entity and an entity which is just like a flow-through entity? How do you take, interest deduction? Different countries have different limitations on interest deductions. The digital economy, this became very, very relevant, especially in COVID, that how do you tax transactions or apply transfer pricing guidelines to transactions that take place using digital assets, especially now that cryptos are actively being used in US and UK. How do you apply international transfer pricing to any transaction that takes place in crypto, for example? How do you align your transactions with OECD guidelines? How do you determine who's the legal versus beneficial owner of a particular business for the purpose of applying transfer pricing guidelines or determining who the associated enterprises are? This is especially common when it comes to flow-through entities again versus your independent entities, because it's very hard to determine who the ultimate beneficial owner is and who should be considered the associated enterprise for application of TP. And I'm sure all of us as tax professionals know about the Vodafone case. It was more in the concept in accordance with, the whole concept of indirect transfers, that how do you tax transfers that take place outside India, but a transfer of an asset that derives its value from India. But in those particular cases as well, a lot of the it had a bearing even on the different transfer pricing guidelines that countries follow. Because if your asset is deriving its value from India, is it okay to also take comparables from India? Is it okay to take foreign comparables? Is it okay to benchmark your transaction in accordance with international standards versus just looking at a domestic market? Different transfer pricing issues that come in while we interplay with international transfer pricing regulations. And something, just the last slide that I would like to cover, completely in accordance with your Pillar 2 framework, we've had a lot of articles, sessions take place on the whole Pillar 2 framework, which has been introduced by the OECD. Basically, what the Pillar 2 framework says for the benefit of everyone, and I know these are more technical topics, but important to cover. Basically, Pillar 2 says that all the countries have to follow like a certain minimum tax rate right now of 15% if any transactions take place between, two entities located in two different countries. And this is mainly done to, avoid profits shifting from like a high tax jurisdiction to a low tax jurisdiction. That was the whole concept behind introducing transfer pricing guidelines as well in the first place. So now, a lot of businesses have started structuring their whole business operations, everything in accordance with Pillar 2 framework. And how this applies to transfer pricing and litigation is that a lot of businesses have introduced something known as an operational transfer pricing margin, basically like a predetermined margin introduced on a quarter to quarter basis that, company A and company B in our example will decide that the profit margin between both the entities for the first quarter should be 10% in accordance with market standards. And they have to follow that profit margin of 10%. Or let's say for the next quarter, they decide on 12%. They have to follow that particular operational transfer pricing profit margin of 10% or 12% so that, the whole case is not selected under international transfer pricing litigation. In terms of Pillar 2, what really becomes important is to see that while we see, the different margins to understand our benchmarking analysis, what you also need to see is the effective tax rate. So if I'm shifting profits from company A, which is in India, to company B, which is, let's say, in Panama, which is like a tax haven, then, those profits that are being shifted to Panama, they also have to get taxed at an effective tax rate of 15% or 12%, as has been decided between the different countries and the whole Pillar 2 framework. Same examples here as well. The whole concept of flow-through entities and independent entities, separate, distinct entities. There's still a lot of uncertainty as to how Pillar 2 will apply in the context of entities that have a different character in different countries, and how you would attribute profits to all of these different entities. Another problem that comes in here, especially with Pillar 2, is because you have to follow an effective tax rate, which is technically calculated at a certain given point in time. There are timing mismatches. Let's say that company is in India, we follow financial year. Company B is in the US, and they follow calendar year. And the effective tax rate in the US will be calculated as on 31st December. But the effective tax rate in India will be calculated on 31st March. And what do you use to calculate your effective tax rate? Your income as on that date, as well as the tax rate. So even if the tax rate, which is of a particular country, remains the same, your income, because the timing of determining your income is different, your effective tax rate will differ, because you're basically comparing the transactions based on different time periods, or you'll have to determine the income pro rata. So this just leads to timing mismatches. And finally, there's a risk of double taxation. Basically, the risk of double taxation is because if India has a tax rate of 15% and we pay taxes on that particular tax rate of 15%, but if Panama has a tax rate of only 2% or 5%, then even the income that shifts to Panama, I'll deduct withholding taxes in India, but if it shifts to Panama, then that particular income will also be subject to tax at 15% because of the whole Pillar 2 and minimum tax framework. So this is where it becomes very, very important for businesses to structure their whole transfer pricing mechanism in such a way that they're trying to use operational transfer pricing profit margins, basically fixed margins that are evaluated on a quarter-to-quarter basis, just to ensure that the income actually meets, the effective tax rate threshold requirements. Sorry, I know that this slide may have been very, very technical, but it's very, very important because Pillar 2 has been the complete talk of the town, especially when it comes to structuring or revamping your whole business structure. But that was it with respect to transfer pricing litigation. If you have any questions, feel free to ask. I'm very happy to take those up as well. I understand a lot of it may have gotten technical, but there's still a lot of uncertainty with respect to transfer pricing litigation, which can only be covered through a proper understanding and documentation of all the concepts. So that's it. Thank you to everyone listening, and I hope this is fruitful.
Hi, Priyanshi. There are certain questions I'll just read out.
Sure.
Okay, so there's a question from Abu Dhabi. The question is there any common transfer pricing method acceptable in Indian tax authorities?
Yes. Based on practical cases that we have seen, the transfer pricing method that is most acceptable in India has always been transactional net margin method and your comparable uncontrolled price method. What we've seen is basically a shift in approach now. Whenever a case is taken up for transfer pricing audit, initially almost about 5 to 6 years ago, transactional net margin method was always used, by default. But now most authorities have started shifting to comparable uncontrolled price method, which is basically that if there's a similar transaction that has taken place, between company and B in the US and company D, which is, let's say a group entity, but in another jurisdiction, then, those transactions will be compared first versus, taking a whole different set of companies or comparables from the market. But these are still the two most common methods. Other method is, in some cases, not even acceptable by the Indian authorities, especially if your case is taken up for litigation. But yeah, these are the two most relevant ones.
Okay.
Another question. If a company exports services and has not provided services within India, what is your opinion on using cup method for transfer pricing if these services are rendered to the holding company abroad? Which method do you consider ideal for transfer pricing audit?
Sure. So, I'll take up the first question first. In terms of this transaction of exports, I think you can take up cup method in this particular case, if at all you have transactions between your Indian entity as well as the holding company one, and you also have a similar transaction of exports taking place between your Indian entity and other entities in that are abroad, like completely unrelated to you. If you have, different export transactions taking place between multiple different entities that are abroad, then you can apply cup. But let's say that you are only exporting goods to your holding company, but you're not exporting goods to any entity apart from your holding company. Then in that particular case, you'll have to go to the market to find comparables, like different comparables that are engaged in similar exports of goods. And only then will you be able to effectively benchmark your transaction.
I think we lost Priyanka, or she's there.
No, I think we lost her. Because of
Then
the
maybe she.
network problem. Yeah.
We wait for 5 minutes. Okay.
I Sorry, I'm not sure what happened. I think I got chucked out of the meeting for some reason.
Priyanshi, your voice is not clear.
Sorry. Were you were able to hear me
We are not able to hear you.
with the previous question?
Priyanshi, you are not audible.
Sorry, now am I audible? I just switched
Yes,
my
yes,
network.
you're
Yeah,
audible.
sorry about that. Should I repeat my answer? I'm not sure where I got cut off.
Yeah, better.
Yeah, but basically what I was saying was that in this export transaction, if you have any particular transaction that takes place with different foreign entities, a similar export transaction that takes place that you are only conducting yourself, then you can apply cup method. But if you only undertake export transactions with your holding company and no other entity, then you will have to apply transactional net margin method, because you will have to look for comparables outside your analysis. And this is actually the same scenario with transfer pricing audit as well. It completely depends on, the entities with whom you're conducting the business and whether you have So it basically depends on the details of the entities with whom you're conducting transactions with, whether you have those details or not.
Got it.
Sorry, my answer was quite broken because I just got out of the meeting twice, but I hope the person asking the question was able to hear my answer.
I hope so. Okay, there's one more question. How to justify litigation based on all the five methods? Like we have selected TNMM, but AO wants to tax with internal cup method.
So in this particular scenario, like I mentioned during my presentation, there are different landmark judgments that very, very emphatically say that the AO cannot question the method that you have applied. It's actually a landmark case known as Mentor Graphics as well, which a lot of consultants use. It's a Supreme Court decision. Basically, once you have selected a particular transfer pricing methodology, it is at your discretion to decide what methodology to apply. The AO and the department only has the onus to show that the benchmarking analysis that you have conducted is right or wrong. They cannot question your judgment or they cannot question your discretion as to the application of the method. And that's just one aspect. What really happens from a very practical transfer pricing litigation perspective is that you have to have very effective documentation in place, especially with respect to your international transactions, to show or to justify the application of a particular method and to show why that other method or any of the other five methods could not be applied to your particular transaction. So if one is you completely get into the procedural aspect of it, but the second is you get into the more substantial aspects of the transaction and show that, okay, in my case, it was absolutely impossible to apply internal cup method, or if I applied internal cup method versus transactional net margin method, the results that you would get would not be accurate. And again, there's a huge interplay between transactional net margin method and external cup because they're more or less similar. But if you apply internal cup, then that means you have to have transactions taking place internally within the group, which you can easily justify by showing your financial statements or the financial statements of group entities or any sort of consolidated financial statements and show that, see, there are no internal transactions taking place within the group itself. So or no similar transactions taking place within the group. So how do I benchmark the transaction?
Okay. Whether DRP order can be appealed?
It can be appealed by the assessee. The revenue cannot appeal that particular order. So you can still go to the ITAT and then the courts, but the department cannot do it because the order of the DRP is binding on the department.
Okay. In one of your slides of DRP, it was mentioned that no fresh issue can be taken. So, what was it exactly? No fresh issue. Can you elaborate that point?
Oh, yes, of course. Thank you for actually bringing that to my attention. So in case of your DRP, let's say that you've taken up 5 grounds of appeal.
Mhm.
You cannot take on a sixth ground of appeal during your DRP proceedings. Versus if you go to a commissioner of income tax appeals, then even if you have taken up 5 grounds, but there's additional information that comes to your knowledge or that you're able to extract some additional information for which you want to take up one more ground or you want to submit as additional information, you can do that during your commissioner of income tax appeals proceedings, but you cannot do that under your DRP proceedings unless the DRP, the panel at their discretion decide that, this ground or this information is very, very relevant to the proceeding and it will hamper our decision-making process if we don't consider it.
So what I understand in case of CIT appeals, there's an option again at the discretion of the Commissioner appeals that they allow for admitting an additional ground. So same way, if DRP finds appropriate, they can admit the additional question.
No, so basically what happens is as per law, you're not allowed to take up a fresh issue before the DRP. So the DRP in very exceptional cases, let's say in 1 out of 100 cases, could admit it if they believe that it's very, very relevant to the given case at hand. But if you go to the Commissioner of Income Tax Appeals, there's still like a whole 50% chance that they will consider it or not consider it. In DRP, it's considered only if it's super material in very technical terms.
Hmm. Okay. What if a company is managed from another country? So one company is in India, and another company is say in UAE, and the UAE company is managed from India. So what will be the tax implications for that?
No, in that particular case, if the UAE company is managed from India, then it'll be that the whole substance and decision-making powers, everything of that particular company is taking place in India. So it will be taxed as a foreign company in India at 35%.
Okay. So if the company in UAE doesn't want that, then they have to show that the company is managed from UAE only.
Correct. And that majority of the decisions are actually taken from UAE.
So even if the decisions are taken from you, but they have to appoint someone there and
Take those.
formulate.
On paper, they have to have someone taking decisions there. They have to show that they have at least 2 to 3 employees in UAE. They have to show that they have some business in UAE. They can't only show passive business, they'll have to show active business. A lot of criteria that are to be shown to fulfill substance requirements in UAE.
Hmm. Okay. Last question. Is there deeper scrutiny by tax authorities if the profit transferred is a country with zero taxation and having TTAA with India?
Yes, there is a much deeper scrutiny, not just from a tax perspective, but even from a guard perspective, actually. From a complete anti-avoidance perspective, there's a lot of scrutiny because then these transactions fall under the gambit of, either sham transactions or transactions having no commercial substance or, could be construed as round tripping or done for the purpose of money laundering as well. So actually, if you have transactions like this, shifting of profits, to a tax haven, it's not just your tax laws that come into picture, anti-avoidance, black money, money laundering laws, all of these white collar crime related laws come into picture. So it's not just transfer pricing specific, but since we're talking about transfer pricing, in this particular case now, because of the whole Pillar 2 framework that provides for a minimum tax rate in that every country has to impose on any income earned by an entity in that particular country, even if the profits are shifted to the tax haven and the tax haven has nil taxes, because of the Pillar 2 framework, that company B in the tax haven will still have to pay tax on that particular income at the minimum effective tax rate.
Okay. I think the questions are the questions are done. Okay. Thank you, Priyanshi, for the session. Lot of clarity on transpricing, and this is the right time because transpricing audit will start. So very good session. That the timing is also very good, considering that we will start with the transpricing audits. And thanks that you have highlighted the different methods and the litigation areas. So at least when we are doing the audit, we are finalizing the forms. We know the litigation aspects before finalizing the forms. So thank you so much, Priyanshi.
Thank you so much for having me, and I hope I was able to answer your questions effectively as well as give you some insights on this particular topic, even in a short span of time, honestly. Yeah, but thank you so much once again, and thank you for having me as a speaker as well.
Thank you.
We start with Introducing our second speaker today now. Okay, so let me introduce our second speaker for the day, CA Vinaya Chougule. She's a prominent banker at JP Morgan, and soon she'll be starting a wealth management venture. As a head coach at Landmark Worldwide, she specializes in transformative coaching. She has founded the Kianshi to empower the transgender community and serves as a joint treasurer of the Rotary Club of Hillview, Bullen West. This is a brief introduction that we have given about her. Now I request CA Vinaya Chougule to present her subject.
Thank you so much, Manisha ma'am, for brief introduction and wonderful session, Priyanshi. Uh, Thank you so much for giving us a lot of insight on the transfer pricing. Thank you so much. And yeah, I'm starting my session. Before that, I'm deeply honored and incredibly grateful for being here and sharing my thoughts in front of each and every uniquely extraordinary women chartered accountant participating in this session today. Thank you so much. I can see your commitment and you have got time out to attend this session. Wednesday afternoon, 3 to 5 p.m. You're making yourself available for hearing Priyanshi and me and get a lot of value in your life and in your career as well, right? That's great, and thank you so much. And I'm personally inviting you all to attend this session with, sitting on one place with pen and paper. Yeah. So, to get maximum value out of this session. And requesting you to not to look at my finger, just, get the point I'm making in my conversations. Okay. So that is very important. Get the point. Okay. I will be sharing a lot of stories which will help you to see your life, and you really will, get the breakthrough in whatever challenges you're facing in your life currently and going forward as well. And those stories will be, will be in your mind. We will be, painting a picture so that, it will be long lasting in your memories. Okay. Whenever in a difficult situation, you will remember those stories and you will get out of those challenging situations. Okay. So let me share my screen. Hope you can see my screen. Okay, great. So how many of you know Taj Mahal? I'm sure everyone knows Taj Mahal, right? You can see Taj Mahal on screen. Okay, great. So this is this is the Taj Mahal, which is located in the right banks of Yamuna River, right? Agra district in Uttar Pradesh. A beautiful, massive structure, majestic presence, and lasting monument in time. How many of you really pause and think what must be underneath in this monument? In other words, what kind of foundation holding this massive tonnage and heavy marble, which is actually facing the challenges in the environment, right? Pollution in and around, right? So how many of you have, thought of it? If I really pause and tell you the story behind it, right? So the foundation is created based on the wood. It's a black wood used to create a foundation of this, uh, great structure. Just yeah, I have stopped that because everyone saw that, right? Yeah. So the point is the huge structure is created based on the foundation is wood. That wood is actually absorbing the water which is coming there from the Yamuna River. And whenever there is a dry, time, which is giving up the water. Okay, and that is the quality of that wood, and it is that wood is not getting impacted by the environmental changes at all. If you see the history of the Taj Mahal, right, beautiful structure is standing on this strong foundation. So now I want you to look at your life. Being a human being, we are also facing a lot of challenges and the constraint in our life, right? Our health, career, finances, our relationships. Sometimes just communicating with the people around us about the barriers, challenges, experiencing of being in a situation hold us back, right? So my point here is being extraordinary in our life is the foundation we stand is very important. I take this platform as an opportunity to acknowledge myself and people in my life who have been integral part of my journey as a chartered accountant. And now I'm inviting you all to look back your life, okay? Look back your life and see how many, how many of, how many people supported you in your journey, right? It's very important. So the path of becoming chartered accountant has been both challenging and rewarding, and marking by long study sessions, rigorous college courses, and the demanding and invaluable experience gained during the articleship. So now consider this acknowledgement and acceptance is the foundation of your success in career and abundance in life. Okay. So no journey of success is completed in isolation. There are numerous people who have played crucial role in this journey. I'm inviting you all to write down acknowledgement on piece of paper for the people in your life. So I'm going through when I'm creating this, take pen and paper and write down, okay, your acknowledgement. This is a foundation you're creating, okay? So acknowledgement to your parent, the most important foundation. They are your source, okay? If you're complete with your source, you can create any, anything in your life, the great career, abundance, anything, okay? Nothing is impossible. Everything is possible. So I want you all to write few lines to acknowledge, okay, your parents, the love, support, and sacrifices they have done for you. Yeah. The next important people in your life, if you have, your in-laws, the kindness, understanding, and support to your next line would be to your spouse, the love and patience offered by your spouse in every challenging situation. Yeah. To your children, joy and curiosity they bring forth every day in your life, which create a lot of happiness. To your siblings, unwavering support and encouragement. To your friends, positivity and encouragement. To your relatives, kind words, advice, and support. To your staff or team members, a strong support and dedication. And to all your well-wishers and mentors for creating the positive energy and kind words. And don't forget to acknowledge the person who gave you first opportunity in practice or in corporate world, who trusted your abilities and handholding you to walk on the path of success. And finally, to our Institute of Chartered Accountants of India for creating various events of networking and knowledge sharing. Yeah. As I reflect on the number of hours spent studying, attending college, and working through articleship, I'm reminded for the collective efforts that have gone into teaching these milestones. Success is not just a result of individual efforts, but also the collective supports and encouragement of those around us. So thank you to each and everyone for being part of this journey. So this will, this is what you're creating the foundation for your successful life. Okay. I'm going to the next section. So I hope everyone has written the acknowledgement for yourself and people around your life who are actually contributing to the success. So now if you minutely see the screen, right? So these are the two circles which I have created here. So if you look at left-hand circle, in that a lot of red color fonts are there. If you see this red color font, if you go through it, this is the life ordinary people live, right? So the story, everyone is having a story. If something happens, our mind creates story around it, right? This is the, so if, I want to share one thing, right? So in my childhood, my mom got beautiful, dress for my sister. And what story I created? My mom loves my sister a lot and not me. I started living in that story, which created, distance between me and my sister. Yeah. So our mind is trained to create a story. So get present to that. Whenever something happens, that happens. We should be stopping ourselves to create, not to create a story, right? Survival, survival mode. Many ordinary people, if you see, living in the survival mode, right? There is no future created. Expectations, we always keep expectations from others. And if those expectations are not getting fulfilled, we get upset, right? Looking good. Many of us, not, taking courage or, asking for something or asking questions, putting our point forward, which called as looking good and which impacts our growth and success. No time. Ordinary people most of the time say, I don't have time to do this. I don't have time to do that. Yeah. This is all reasons. This is not the fact. Okay. Right or wrong. Many of us, keep doing, cost benefit analysis, whether this is the right decision or this is the right, right decision, or is this a right, is this wrong, right? So most of the time we are, struggling to make decision in most important areas of our life. Reasons, yeah, for everything we have reason, right? And excuses. So we have to catch ourselves when we are giving reasons, excuses, right? Win or lose. We generally see when we take some actions, when we see we are going to win. And if we see I am going to lose, we stop taking action, right? So catch yourself in that part. Act is a behavior. I'm sharing slide. You can see my slide. Yeah. Yeah. Just a second. Just a second. Now you can see. Okay, great. Thank you so much. Yeah. So the fear of failure, right? Many of us, stop ourselves from taking action by, having a fear of failure or rejection. What if somebody is saying no to me, right? So we will not go ahead and ask that question, or we don't take that action, right? So this is the entire, the words, if you see, these are the ordinary life. And what is extraordinary life? If you see standing in the extraordinary, world, the person will be courageous. He or she will not think about results at all. Why, whenever there is a doubt, there is a question, any action, not thinking about results, you will go and take the action, right? The possibility, every opportunity, the person will look for the possibility. Everything is possible for that person, right? If that person is considering themselves as extraordinary person and looking for living extraordinary life. Leadership, the person will say, if not me, then who, right? So that person will take the responsibility and with the commitment will take the leadership. Creation, the creation is, instead of talking about past, person will speak about what new things can be created. Mastery, the person who wants to live extraordinary life will do the mastery in this topic, right? Boldness, like courageous, the person will be bold enough to ask question, get a clarity, not, living in the stories, right? Or assumption. The power, the, the power is again comes along with the courage and the confidence. Authenticity. If something is not done, not done. Go and authentically share with the person who want to share, or the person who have given, where you have given your word. Actions, extraordinary person will live in the world of actions, not in the world of reasons, right? So that will give you the reasons. Self-expression. The self-expression is the life you want to love, you want to live, the life you love, right? With the self-expression on the topic which you want to express yourself fully. It's not like, you're, putting yourself in the challenging situation and you're struggling and you're not getting path to come out of it, right? Say no. It's a very good and very, very important quality extraordinary person is, possesses. Saying no, right? Meaningless. For each and everything, we keep giving meanings, right? So that is based on our past experiences. So we'll have to see everything is meaningless, right? And we have to catch ourselves what meaning we are giving to the things happening around us. And this is the extraordinary, life. I would suggest you to catch yourself from and stop yourself from living ordinary life and start living extraordinary life, standing in courage, possibility, leadership, creation, mastery, boldness, power, authenticity, self expression, actions, saying no. If you don't want to do it and do anything, say clear no. Meaningless. What kind of meaning you're putting for the things happening around you? Yeah. I will go to the next slide here. So if you see the first picture, right? The boat, the rowing boat. If you see, this boat is going under a particular direction, right? So to live the extraordinary life, the most important thing is align people from your life in your vision, right? Then you will be reaching to your goal faster because everyone will be supporting you to, achieve your goals. That is very, very important. It includes people in your office, people in your life, like friends, relatives, people at your home, your colleagues or team members. So everyone is aligned with your vision. You will reach to your goal very, very fast. Okay. The second, the quality versus quantity. I would like to share one story here, right? So there are two, there were two group of people, right? So the particular material is given to the one group and told them to make a quality pot. Okay. And the one sort of material is given to the another group of people and told them to create a quantity pots. Okay. So both teams started working towards it, and at the end of, after completion of the 1 hour time given to them, both teams come up with the product they have created. So the quality team come up with the best pot they have created and they have placed in front of the judges. And the second team got the lot of pots they have created and they got their products in front of judges. And they have literally created 100 pots in 1 hour. Okay. The point here is when judges started looking at the pots they have created, the first pot which quality team created, which was there, good quality, but the pot which is created by the quantity team is more beautiful than the quality team, the pot created by the quality team. So what is the difference between two, right? The quality team put lot of thoughts, okay, thinking process to make sure how to make the quality pot. And the quantity team, during the process they have followed in creating the pots, they created multiple pots, but from every mistake, they started learning new thing. And after creating 99 pots, 100th pot they have created, which was the best quality pot they have created. The only difference is during the process they learned a lot of things, and from mistakes they have learned a lot of things, and they could come out of best quality product. So look at your vision. Just don't think that I will be put lot of time in thinking process. Instead of doing that, start taking action and start learning from every mistake you do. Okay, that is most important to come up with the the quality thing which you are going to generate over the over the period of time. So the next is, you can see lovely monkey with banana, right? Whenever we are taking a lot of actions, right? So we are failing, right? And we feel very bad about it. So here the story of a monkey, when monkey is jumping to catch one banana, if monkey is failing, what he will do for the next step? The next step is he will put all his efforts and catch the next banana. The point here is the monkey is not stopping himself, crying for losing banana. He will see what is the mistake he has made and he will put all the efforts to take next step, right? And here the point is that your action is failing and you are not failure, right? You are not failing, your action is failing. So this is the most important learning here in this topic. Yeah. So how many of you, I'm sure everyone knows how to make tea, right? So making your favorite tea, again, making a favorite tea is, if I ask you how many steps you follow to make a tea, the answer would be 6, 7 max, right? Putting water on gas, putting masala, adrak, putting chai, tea powder, sugar, milk, and boiling it, right? And tea is ready. But if you minutely see, the action for making your favorite tea is around total 50 to 60 actions. If you count from, opening a drawer, getting the, vessel out from the drawer, you know, keeping on the gas, again, lightening the gas, then putting the water, getting, taking a glass in the hand, going to your, tap, getting a water, putting a water in the vessel. If you count all these steps, it's literally 50 to 60 steps, right? And then you will, actually enjoy your favorite. So the point here is, if you really, working on any project, any plan, or anything, right? See what are the minute things, small actions you will put down, right? And which will give you the results. Not necessary, or there is, only one action you are taking after 8 days or 10 days or a month. Take baby steps, right? Take small steps to achieve your goals and to work to your, vision, right? So that is very important. So keep those things in your mind to, making a favorite tea, steps to follow, make the favorite tea, right? So it's very important. And these steps, this method you can apply everywhere in your life. Each and every step is important because there is a possibility that, we are not considering the small step which may create a failure, right? So it is very important to, focus on small steps, which is very important to, create a, you know, contribute to your vision. Yeah. So next one is tips for success. Challenge negative thoughts. So negative thoughts, right? Thoughts, if you see, thoughts are coming and going all the time. It's like a gases in our stomach, right? We cannot control it, right? So don't give a lot of importance to your thoughts, which will, disempower you in your life. So just indulge in those thoughts for 2 minutes and come out of it. Okay. Be confident and courageous. It's very important for being successful. Recognize your achievements. Okay. So the first of all, being a chartered accountant, it's not a joke. You have put a lot of efforts, lot of, efforts you have put in place, then, you're working hard to, get this day, right? To see this day where you are, right? So the next important is build networks. See if you are really building the network. And everywhere in your life, the relationship works. The most important is network and relationships. Create your buddy, create your buddy in your life where you are going and sharing your life, sharing your vision, sharing your goal, right? And the buddy will be actually responsible for your success. And don't choose a buddy who will not be holding you to account. Choose a person who will be really, asking question, how come you're not taking action, right? So that is very important for making you successful. Embrace change, yeah, technology, flexible. You should be very flexible, adopt technology which is in the market, see how you will be, more effective in what you're doing. That is very important. Plan your work, work your plan. This is a very good mantra. If you are not planning the things may not happen the way you want, right? Because the day will come, day will go, right? And you will not achieve the things which you want, right? For months or for years. So plan your work, work on your plan. So place a goal, cut down that, goal into, various action, monthly action, weekly action, daily action, right? And put it in your calendar and start working towards it. That will give you, very good results. Trust me. Everything matters. Everything matters. It starts from the way you dress, the way you speak, the way you put your point forward. Everything matters. So keep keep improving yourself on each and everything, right? I will go on the next step, supportive initiatives, right? If you see a lot of mentoring programs available, if you don't have mentor in your life, or you know, you can, if you are in corporate, see for the mentoring program, mentorship program, create one mentor for you. Yeah. And if you are in the industry, if you are practicing, look for the mentor from the same field so that, can support you, guide you to achieve your success. Comeback opportunities, many organizations are having the comeback opportunities created for in the industry, which you can explore and really bounce back in your career. Work family balance, yeah, considering post COVID, lot of corporates and the practicing chartered accountants also started giving a lot of flexibility, right, to create this work family balance. That is very important, from considering the not only for female employees but for the male employees as well, considering the nuclear family culture nowadays, right? The policy changes, corporate, government, institute, lot of policy changes are happening ongoingly to support every individual professional in the career. And finally, once you are encouraged, right, and you start living extraordinary life, encourage and support your community and help them break down the barriers preventing their success. Keep in mind, when you are coaching someone, you are going to get the value out of that coaching, right? So that is also very important. When you are having conversation, you are also going to get lot of value in your life, looking at the challenges. When we give solutions to other, or we are asking some questions to your friend, your colleague, you are also looking at your life to get a lot of value. Okay, so that is very important. So look for those opportunities and start working towards living extraordinary life. Yeah. So you can follow me on LinkedIn, CA Vinaya Chogale, and I have put my contact here in case you need any support or you are facing any challenges in your life. You can always contact. Yeah. If we have some time, do we have time? It's 43, right? Can I tell you one more story if time permits? Komal, Manisha, we have time, right? Yeah. How many of you know the monkey catcher catches monkey? How many of you know? Okay, let me create one thing. Okay, so in forest, monkey catcher catches monkey by putting one small cage. Okay, what he does generally, in the cage, lot of juicy bananas are kept in the cage. Okay, so that monkey with the smell, right, with the sweet smell, monkey will come to that cage, go inside that cage, and then monkey catcher can easily catch the monkey. Okay, what he generally do, he's keeping a lot of juicy banana inside the cage, and he's keeping only small hole to that cage. Okay, where the monkey's hand will go inside and come out like that. Okay, So this is the only one hole is there to, monkey to catch the fruits inside the cage. And monkey catcher, put all those bananas and go and, afternoon take a nap, right? And once the monkeys, get trapped in that cage, monkey catcher comes and, catch that monkey. So once monkey catcher, put that cage and, he goes and go to sleep, okay, afternoon. And when he see there is a noise, right? When monkeys comes and start getting the banana. When there is, in the case, there is a banana, and when he hold that banana and try to get his hand out, the hand is not coming out from that hole. The hole is created only to get his hand out, the monkey's hand out, not with banana, only empty hand. Okay. But what is the monkey doing? Monkey is catching the banana and trying to get the hand out. But the hand is not coming out because the hole is very small, right? It's not meant to get hand out along with the fruit, right? So the monkey starts shouting, crying, whatever that monkey wants to do, right? Then monkey catcher gets the noise and he starts wondering, okay, the monkey is there. So he starts getting ready, go for a bath. He takes his own sweet time and come and, put his net on the monkey and, catch that monkey and go, right? The moral of the story, right? So in our life, a lot of time we hold small thing in our life, very, very small thing, right? Which we are not giving up. If that small thing, that monkey would have, that banana, the monkey would have given up, his life would have saved, right? He would be jumping in the forest, enjoying a lot of other fruits along with the bananas as well, right? But here, the monkey is not, giving up that small banana. He's keeping that banana in his hand, and the monkey catcher comes and, catch the monkey. So the whole point is this in our life, those small things, right? Just give up, which will give you freedom, peace of mind, and self-expression. And you will start living the life you love, right? That is the whole point I wanted to make here. Hope you enjoyed the story. And yeah, any questions, Manisha?
Thank you, ma'am. The question is raised by Sumit Jain from Jaipur.
Mm-hmm.
He is asking that whether a win-win situation for all is an extraordinary thing in life.
Win-win situation for all. Yeah, that will be an extraordinary thing in your life, but the challenges will come and go, right? So the most important thing of a person who is living extraordinary life is how you're dealing with the challenges. That is most important. Win-win situation is not about the compromising the things at all. Yeah, I'm not saying that you should be start compromising or start, getting agreeing with the, every point the other person is making. Not necessarily. What you feel. If you have a point, you have a point. It's not like compromising or anything, right? So the extraordinary life is you should be also having a power, peace of mind, self-expression, and freedom as well. That is called extraordinary life. Yeah. Hope I answered this question.
Madam, can I just ask you one thing?
Yeah.
By giving your introduction, we just said that you have founded the Kian Sheep
Mm-hmm.
to empower the transgender community.
Yeah.
This was a very rare idea and needs a lot of courage to do such activities. So what
Yeah.
is it that made you think about this?
So the my funda is, I empower people. See, it's very easy to give, money to person or maybe, the beggar or, the transgender who is, begging on the street, right? It's very easy. But what we are doing, we are making them handicapped. We are pushing them not to do the things, right? So if we are making the platform, we are helping or we are supporting someone to live great life. They are capable. It's not like they are not capable or they can't do it. Everyone has brain, right? The only point is they are not getting a platform or they are not getting the opportunity. So if we all come together and give that platform and opportunity to them, they will also start living great life. They're also human beings, right? So it's
What type
the
of
entire
opportunities
funda
are
behind
there
it
available?
is, yeah. Yeah, Manish.
As a community, what type of opportunities are we making them available so that we empower them basically?
So the opportunity is a lot of multinational organizations is, as part of their diversity and inclusion programs, started hiring transgender community, LGBTQ community people, which making them, if you see, it's not like if they are begging, they are not educated. No, that is not the fact. I speak with a lot of transgenders on, signals, and they're educated. They are also living extraordinary life. The only point is they are not getting job, they are not getting opportunity, and they just, just to have daily food and, earning money, they are doing this. So this idea actually came in my head when I was driving. I was on a signal, and I saw, two, three transgender were begging, and one man and a woman is giving direction to the traffic. And when I was started thinking about how it will look like when this community people will be wearing the uniform and giving direction to the vehicles. It is possible. It's not about gender. It's not about you know male or female or anything, right? It's about providing the service, right? So, and from that point in time, I started thinking about, how to contribute to this community. And then I started this project. And I am in a conversation with a lot of transgenders, helping them, understanding their challenges, and supporting them. Thank you for this question, Manisha.
And there is also one thing that you're soon starting a wealth management venture.
Mm-hmm.
And I would like you to give some idea about what is this transformative coaching.
Okay, so the transformative coaching, which I wanted to tell you about, we as a human being, having lot of our mindset. If you see Manisha at 5 years old, how you was, you're very free, right? Enjoying your life, and you have a lot of friends, and yeah, you're telling people whatever you want to tell. You're not stopping yourself, and how you are now. It's a huge transformation, right? It's because of all the experiences of your life, right? Our brain is, uh, what you say, our brain is putting a lot of barriers in ourselves. Once there is an experience, what we do, we put some decision in our future. If so, if I let me give you an example. In third standard, I raised my hand to give the answer, and that answer was wrong. All students started laughing. What I decided, I'm not going to answer again. I'm not going to raise my hand, right? And till date, till 2 years back, I did one program, landmark program. Till that date, I was not raising my hand. I was not confident at all, because what decision I have put, I'm not going to raise my hand because people are laughing if the answer is wrong, right? If there is a business failure, what decision we are putting in future, I'm not going to take any risk. Even if I'm taking risk, I will take limited risk, right? So we put a lot of barriers, right? And we start living that life. We are on survival mode all the time. If you see, many of us living survival mode, right? Getting up morning, preparing for food, studies, going office, coming back, right? Next day is the same day, right? On weekends, do whatever, going in a mall, shopping, preparing for the next week. That's it, right? If you see yourself living extraordinary life, you're scheduling yourself for each and everything. I'm part of Rotary. I'm contributing to a lot of beneficiaries, participating in a lot of projects, I'm running Kianshi project. I'm having a lot of conversation with people whenever it could be a friends, colleagues, it could be, anyone. I started living extraordinary life. I started breaking my barriers. And when I started breaking my barriers, which I have put on myself based on my past experiences, now I can say everything is possible. I can do anything, right? And that is the result that I'm going to start my own venture as well.
So basically, it is the inhibitions which we have on our mind, which
Yeah.
stop us from doing many things.
Yeah. So you have many things to do, but you have a lot of blind spots why you're not doing. Knowing things will not make any difference, right? How many of you know how to lose weight?
Probably each one of us.
Yeah, but we are not. Are we losing weight by watching videos, reading books? No, knowing doesn't make any difference, right? It's all about that. I know I want to do 100 things, but how? That is a question. So we'll have to see what is my blind spot, what are the things stopping me. If I'm standing in the commitment, I'm standing in the responsibility, I'm standing in being courageous, being confident, I will get a pathway to take actions. That is very important. Any questions, Manisha? Hope you have got answer to your question.
Yeah, definitely, madam.
Thank you.
Just like to see whether there's any question in the chat box.
Yeah.
Thank you, ma'am, for your explanation. I will just read out the next question for you.
Yeah.
Next question is from Calcutta. The question is how to know for sure if the situation we are facing in life is the one that the monkey was facing, or the situation where if you have tried once more, you would have succeeded.
See, it's not like one action will give you result. Okay, you'll have to take second action. Second action may not give you result, desired result. It will give some result. It's not like you're not going to get the result. Okay, you're going to get the result, but may not get the desired result. You'll have to keep trying, and you'll have to see what is missing in my previous action. Yeah. Considering here all women chartered accountants, the first pav bhaji I have made, right? It was not that great, but when I made second pav bhaji, right, it was better than the first. When I made third pav bhaji, it was better than first and second, right? But when I know the entire process, the pav bhaji which I'm making now, maybe it would be 50th or 100th, right? Which is best. So it's not about getting the desired result. In the first action, you may not get the desired result, but stopping yourself may not give you any results, right? So keep trying, keep, when you are failing, there is opportunity to see what is missing, right? And discovering yourself, that is very important. That will give you the access to take new action. Hope I answered the question.
Yeah.
You're on mute, Komal.
Okay, thank you, ma'am. Yeah. So thank you for all this guidance.
You're on mute again.
Yeah, she's in mute.
Hello, ma'am. Am I audible?
Yes, go ahead.
Okay, thank you, ma'am, for all the news stories which I get to know about today. And of course, our viewers would be happy to know all these situations. So, on behalf, I would like to convey my gratitude to Preeti ma'am for this amazing initiative of initiating Yashwini series. Thank you to our wonderful speaker, CA Vinaya Chaudhary, ma'am, for appraising us, and also my gratitude all for taking time and to join the session, making it a big success. Thanks to all.
Thank you so much. If there is no question, we can end this, right, Komal?
Yeah, that are all the questions I have already read.
Thank you so much.
Thank you, madam.
Bye.
Thank you.
Thank you.